Hi everybody, this is Karrina Brown. I'm with Keller Williams United Real Estate, and today we're going to talk a little bit about buying a house with no money down, zero down payment, or 100% financing. Well, we've always had these methods, and we do continue to have this kind of opportunity here in Northern Virginia to buy a home with either zero down or very little cash down. Well, you do need some money, and we're going to talk about that a little later. In the meantime, let's go over the three basic loan types to do with 0% down. So the first one would be some type of FHA financing. FHA has been around for a long time, since the 1930s. Roosevelt put it in place to help low and moderate income buyers get a start on the housing ladder. It does take a 3.5% down payment. But what we have here is we have VHDA, Virginia Housing Development Authority, and they will help with that down payment with a grant. At this time, you do need 1% in and then the grant. There's some qualifications. You can't make too much money. You do have to, the credit score is pretty low, like 640, 620 in that range, that kind of thing. There is some mortgage insurance for most of the programs, but there are some without mortgage insurance. The second method would be a VA loan. These are veterans loans. They're only available to veterans or active duty military. And again, you never get zero down and get those same rates that are advertised all over the internet. There's some kind of something that's going to get you in with very little cash down. And with the VA loan, there is an upfront funding fee. This is money that's collected by the VA, put in a pool to insure those loans for veterans. The VA funding fee can be zero if somebody has an injury or a disabled veteran, and then it can be up to 1.5% or I think even 2% of the loan amount can be added to the loan. So let's say if you borrow $300,000, you could walk away from the closing table with a loan of $306,000. The interest rates are pretty good, but that's the VA, no money down. The third type of no money down financing is a portfolio loan. These are loans that are generated or originated by different lenders, and they're held in their in-house programs. So high net worth individuals can check with their bank and see if they can work something out with their own bank. At times, different brokerage companies have offered this type of financing. One of the ones that's more readily available for a lot of clients here in our area is that Navy Federal Credit Union offers a zero down conventional loan. You do have to have very good A+ credit, and they do hold the loans in-house. They do charge either a 0.5 point or a point. Now remember, a point is 1% of the loan amount. So if you're borrowing $500,000, a 0.5 point is $2,500, which they will add to the loan amount in order to generate this loan. The loans are held in-house, and they're a little bit more expensive than regular financing. At this time, in the fall of 2021, zero down loans from NFCU are hovering just under 4%, whereas regular financing can be as low as 3% or even lower. So there is a little premium there. Now, earlier in the video, I said you do have to have some money. Remember, there are closing costs. Closing costs, I haven't seen them any lower than $7,500, and that would be for a budget condo. So really think in terms of 2.5% to 3% of the purchase price for your closing costs. $8,500 or so, around $300,000 or less, $10,000 or so, around $500,000. And then if you're up in the millions, it could be $15,000 to $20,000 for closing costs. In some markets, the seller will help you pay these closing costs. Again, depending on the loan program, we're seeing that some of these programs will allow the seller to pay all the closing costs. Some of these programs will allow the seller to pay about half the closing costs, but that's going to depend on the real estate market at that time. We're coming off of a very hot real estate market where no sellers paid any buyer's closing costs. So do budget some money for closing costs. And the third, well, I don't know where we're counting right now. The last requirement for cash is your reserves. Once you have purchased this home, these lenders don't want you to be down to zero. They want you to have some money in the bank, for expenses, for the next month's mortgage payment. And I'm sure you don't want to have no money in the bank. So lenders will need 1, 2, 3 months of reserves. This could be in your retirement account or something like that, but some access to cash that you could use in case of emergencies. So check out our links below and either call me or your local loan officer. Actually, I always think you should call the realtor first, because sometimes some loan officers will say, no, I can't do that. But a realtor like myself who works hard for their clients is going to know of other loan officers that have different mortgage programs. Give us a call. Let's see if we can help you buy a house.